Welcome back to Market Day Report. I'm Chris Swift. I'm anxious to see if we have any change in the grain market since we last left you, and anxious to get to our next guest too. So let's take a look and see where we're at. I got July corn down 5 3/4 at 456 3/4, hugging the low of the day. Got September down 5 3/4 at 467 1/2, and December 481 1/2, down 5 1/2, penny off the low of the day. Got the soybean market, it's still a little bit softer. Got the July contract actually up on the day by 1 1/2 at 12.15, but September down 3 at 11.99 3/4. Still hugging under 12, 11.98 1/4, down 2 3/4 on those November beans. Let's see what we got on the Chicago wheat. Softer as well, down 6 3/4 on the July at 6.59 even. Deese is down 6 1/4 at 7.03 1/4. Kansas City hard red winter wheat. It's not as soft, but just down 1 3/4 on the July at 6.73 1/4. Deese down 2 at 7.07 1/2, and we'll wrap it up with Minneapolis spring wheat down 6 1/4 on the July at 7.20 3/4. December down a penny, 7.47 1/2. I want to invite my guest Tommy Grisafi in. Tommy, you and I talked a little bit before we came on there. This is day 3 lower in the corn market. Does that spook you a little bit?
Yeah, I think the corn market's proven to folks we're not running out of corn, and the funds did a wonderful job of covering. It takes a dime to move 100,000 contracts, and they moved a few 100,000 contracts that moved the corn market. I think people out there think there's a bull story, and the market's proven to you both through spreads, not only in corn but in wheat and other markets, that the bull story's not quite alive. Um, but when you see the markets go up in the way they did, it makes you think like, yeah, we're back, kind of like in the movies, right? We're back, but we're not back at all, buddy. Corn's down 6. I was really concerned yesterday when corn, beans, and wheat rallied up and they stopped on a dime and all closed on the lows or close to lows. They did it again last night. They all traded up and then they gave it up. This is real selling. For people who thought the funds were going to go from short to neutral to really long. I don't think we'll ever see that. We'll see commitment of traders tomorrow, but real farmer selling and hedging did happen, though. On a positive note, I'm sure you did a lot of it also. People really had a great chance to move old crop. They had a great chance to continue to cover the gap in crop insurance on new crop. And I had personally about 10, 15 clients sell 25, whether they sold futures or did options or something, but not enough, Chris. We're going to look back in a few months and say I should have done more. And farmers say, I wish you would have pushed me harder. We were pushing the last few weeks, but in the end, the clicking the button and calling the elevator is up to them. Back to you, sir.
All right, I'm going to ask you a loaded question, Tommy. Do you feel like a lot of our producers now are speculating a little bit more or trading the markets, trying to improve whatever they're doing instead of maybe just a solid marketing plan that was figured out 6 months ago, 12 months ago?
Great question. I will say this, they can afford to make mistakes. They have extra cash. A lot of clients I work with are not using operating. They're working from a cash standpoint. And so mistakes can be kicked under the rug and they don't have to tell anyone. They can make a mistake in marketing. No trips get canceled. No boats get taken off the lake house. The new equipment continues to show up. The stock market closed at all-time highs. Land prices, even with inflation, are staying at equal levels. They haven't collapsed. And commodity prices are at 2-year highs when you look at the CRB. So even if you make a mistake in marketing, there's enough good stuff going around to cover it up.
Yeah, that's interesting that you say that. And I've looked at several different factors of that, and we keep seeing, more and more really speculative trade out there in that. Anything in the bean market, because we're heading right around that $12 level there. Anything really excites you there one way or the other?
Well, we had that notebook crush number, so that wasn't too good. We're seeing a little bit of exports here. The problem, Chris, is we've spent too many years at elevated prices, and South America is going to bury us with production. They aren't as into building homes and dollar stores. They're into tearing up rainforests and getting into production farm ground. And that's a really tough incline that the American farmer has to compete against them getting in the same job we do. The same great bag of corn seed that's sold in America is sold in South America.
Absolutely. And we also understand, too, that down there, the planting aspects of it, and they use the soybeans a lot as a currency. Is that right?
There is some problem. That's interesting you say that. I had a client call yesterday, and the company he gave his credit card to make a payment said that they're having an extremely hard time getting payments from Argentine farmers, that their credit cards keep getting denied. So our our wonderful opportunity on how we trade money and how we trade credit here in America isn't the same way. I would agree with that point you're making, Chris.
Absolutely. Tommy, stick around. I want to ask you something about the cattle market when we come back with a real quick break. Stay with us. We're talking to Tommy Grisafi. Welcome back to Market Day Report. Let's see if we've had any changes in the live cattle market since we last left, and it doesn't look like a great deal. We're still trading plus on the day with the June 179.15 up 90. The August contract at 177.50 up 97, all the way out to that Dees contract, 184.55 up 72. And I've not heard of any cash trade that has taken place yet this week, so we're a little bit of void information on our cash trade. With the feeder cattle market, the August is up $1.72 at 257.60. It's about $1.10 off the high. The September up $1.75 at 258.70, and October up 150 at 259.17. See what our hog market is doing. Hog market's a little firmer still. We're at 99.10 now on the June contract, up $1.60, really diverging that basis even wider today. The July contract up 147 at 102.35, and August up 132 at 101.35. I'm going to invite Tommy Grisafi back in for just a second. I got another loaded question for you, Tommy. We talk about inflation. We talk about it impacting the consumer. We know people like some of it because it makes prices rise. And right now we need a tremendous rise in the price of cattle to be able to offset some of these input costs that we're getting. Is that consumer going to be the one that just says, I can pay anything for?
Well, no one's ever thrown a party and served nothing but salad, right? So if you're having special occasions, you're having a nice steak or something else. I would say the top end of the high end meats it's getting tough for some people to pay for. We're becoming a hamburger society. You've seen that McDonald's is trying to do a new $5 bundle meal. The thing is, to your point, Chris, we've all been stretched. No matter what monetary class you're from, just truly rich people don't care. But that's such a few amount of people holding so much of the wealth. Yesterday was a great day for the beef industry because the stock market closed at the high during grilling season. As people go look at their 401ks, everything else, there's a wealth effect happening. And this happens during the election years. People want people to feel good. So they say, you know what? Things weren't that bad the last 4 years. That's not for me to decide. I only get one vote. But personally, life's good for Tom Grisafi. Volatility is good in the beef market and the grain market. And I'm doing well as my burger. I'll be having steak this weekend.
Good for you. Energy markets. So I know that has an impact too, and we've seen them a little bit higher today, but seemingly like they're already in a downtrend. Is that part of the feel good, make the consumer feel good here towards the election time?
Well, no one wants anyone to feel good with higher gas, but the government did screw up not filling up the SPF. They kind of had a fiduciary duty, not kind of, they had a fiduciary do that, lower prices and missed out. Oil's bounced a lot the last few days. Typically towards this holiday coming up here next week, we tend to see gas prices hit a little bit of a higher price as we go into driving season. Not to mention the amount of fuel we're burning to get this crop in the ground. This is peak energy usage here on some of the distillates.
Absolutely. Tommy, really appreciate you taking the time to be with us this morning. Hey, it's Tommy Grisafi. And Suzanne, I know who the next musical guest is, and I cannot wait.
Coming up in our next half hour.
Oh, it's next half. It's not this one.
No, next half hour.
I got a little ahead of myself. Sorry.
We're very, very close, so we're going to stay tuned for that.
Good deal.
Thank you.